All right, so just coming out of my meeting with Matt, interesting talk, but I'm headed straight into another meeting in just a couple of minutes here where I'm going to be talking to Jeff Swinoga of Exploits Discovery. They now have assets in Quebec and Ontario, but they're also currently trying to transact their Newfoundland assets into newfound gold. But a 10 million market cap company, so as you can imagine, capital is not self-explanatory there, although if that deal goes through, there might be more liquidity, and so they gotta have to figure out a way to spend that money efficiently. So let's go and talk to Jeff and see what he wants to do with the money. All right, Jeff, I want to talk to you about not wasting shareholders' capital during a bull market, essentially. How do you do that? What do you spend your money on to make it worth it? And especially in your case, because you've had a bit of a restructuring right now.
Yeah.
So talk to me about that.
Well, thanks, Antonio. Honestly, you're doing a great job. Keep it up. For us, we've had quite a transformation over the last 5 months. We picked up almost 700,000 ounces of gold, and we've also monetized our Newfoundland claims to newfound gold. So in terms of, gold prices going up, we've got new properties. We're putting new people, like we just hired Natalie, a great geo, loves the Hawken project in Ontario. So in terms of saving money, I think what we're looking to do is accelerate these projects. And actually we did this non-dilutive, you can call it like a financing, by monetizing our Newfoundland properties. And that gave us an overall value of the deal is about $10 million, in my opinion, because we have that 1% NSR. So we're really getting things going. We've been setting the stage for a high gold price and actually getting gold ounces in the ground. Like we talked 5 months ago, we would have no gold resources because we had lots of gold zones in Newfoundland. But now we're very fortunate to be in a situation where shareholders can participate with a rising newfound share price, rising gold price, and also we've restructured our team, to your point about reducing costs, to make sure that we're doing the relevant programs that make sense for each of the projects. Mm-hmm. And we do have, the question we do get is, how are you going to manage 4 projects now, right? So it's going to be very important how we allocate capital, and do we have the right people on the job to do the right programs. Like we're not drilling yet. We will be drilling hopefully soon in the fall, but putting in programs, for example, like geophysical programs, to really understand where these anomalies are and where those characteristics line up with existing resources. Mm-hmm. So that's not that expensive, but it is very important to kind of understand the geology first, right? So we want to do that first, and then we want to start drilling at some point.
How do you manage that ratio there between what you spend on the projects and what you spend on the corporate stuff, retaining talent as well as telling the story?
Yeah, no, great question. And for us being in transformation, I like to think of it as new exploits or exploits 2.0. So we do have to get out there and tell the story. Like right now, if you look at our pro forma cash and treasury with the shares we've got from Newfound coming soon, it's about $10, $11 million. And our market cap's only $9, $10 million. So there's a valuation gap right there. We're getting no credit for almost having 1 million ounces in these, historic ounces in these projects. So it's our job to get out there and start telling the story. Doing interviews like this, for example, is very important. So we do have to spend money to communicate, to shareholders, get out there and talk to people. Going to Beaver Creek, for example. And so it is a lot of work to do that. But the key thing is putting money in the ground, like you said, and making sure that we're not just drilling in areas that just to drill the current resource. You know what I'm saying? Because there could be something bigger and better out there, along strike or down deep, right? You want to make sure that we're not just building ounces to say we've got, instead of 700,000, we've got 1 million ounces. But you know what? We want to make sure that we're going into a multi-million ounce exploration company. That's what our goal is.
Yeah. How much money do you have right now? When's the next time you're going to be tapping into the markets?
Yeah, no, great question. Last reported we got 3.6 million, all hard dollars. The valuation of this Newfound deal is about 10 in total, but $7 million in Newfound shares, another 1.8 if we deliver certain claims. So still pro forma about 10 million. But we do have to have a shareholder vote for it, and we do have a hold period for about 4 months afterwards. So right now 3.6 million, which is great, and that'll be useful for us. And then we'll get into what we do next year with the Newfound shares.
On the topic of talent and raising capital, what is your staff compensation going to be tied to, staff and management? Is it having raised capital? Is it tied to your share price? What are your KPIs there?
Yeah, no, mostly it's for key people that, like Natalie, for example, she's a great PhD. She was actually the former VPX for the company that had the Hawkins project in Ontario. This is a 60-kilometer land package. It's big, right? So having someone super smart like that, she's on retainer. She doesn't have an hourly rate as well. So it's variable that way. We also have a person, Mark Richardson, working on our Quebec properties. He's on retainer as well, but also variable with respect to per hour. So as things gear up, they will get paid more, and as if we do have a lull for whatever reason, then we could pay less. Yeah, so we can. That's kind of the new structure going forward for us. We want to be highly efficient, do smart exploration, and deliver a lot of value for our shareholders.